Let's take a look at the bigger picture. Nancy Daoud's with us, CEO of Opus Advice First. Let's talk about that, Nancy. When we look at what's going on in this market and the volatility, interesting enough, the VIX came down below 13 a moment ago. Some of your thoughts.
Well, it's kind of like the Goldilocks effect right now. It's not too hot, not too cold. I think a Hollywood director couldn't have scripted last week's results any better. Investors just heard everything they wanted to hear, and hence the rally. And now it's just kind of quiet for a change. It doesn't seem like anything big is happening, which makes us more vigilant, obviously, because we want to make sure that we don't miss anything in this environment.
Right. There's always something happening. I know that for sure. And there's always opportunity in the market. Sometimes you'll find them in places you weren't expecting. Where have you been looking lately?
Well, I think it's important to note that as big tech has definitely still continued to lead the market. And the expectation is that it will continue to lead the market. And if it doesn't, we won't have the same year-over-year results coming towards the end of the year, which is where the big upside was for big tech. So that's going to be important to watch. Right now, we're still sort of lulling over the results from the last 6 months. But if it doesn't continue and become persistent through to the end of the year, we will see that pullback. Now, also, I think there's some still upside opportunity in the broader S&P 500. That's not overpriced yet. And I think that that area may have some opportunity in it, as well as, of course, longer duration bonds. I think we're all reasonably confident that the Fed will not be raising rates anymore. They might even be cutting rates, and we still think that will not happen until the very end of the year, and maybe just one rate cut. But if rates are no longer going up, then longer duration bonds at least, hold on to the yield that is available right now. And if bond prices do go up, you'll be positioned well for that. So that's another opportunity. And lastly, Europe is starting to look very, very attractive because it's been undervalued for so long that there might be some longer term opportunities there as well.
Yeah, understood. As we comb through some of the sectors that you mentioned, and you mentioned tech that's been catching a bit of late, when you think about tech and the growth, the projections, and fundamentally earnings have been improving, what areas of tech do you like or recommend?
Well, we tend to stick with the bigger, larger cap growth, but really the broad spectrum has been very, very successful in the more recent months. But I think it's important to diversify, obviously, because while tech has done extremely well, it can be significantly more volatile than the broader S&P 500 stocks. So I think it is very, very important to diversify in other sectors such as utilities and financials and healthcare. Those we continue to hold on and stay the course with those. Right. And in fact, actually, utilities are up now.
Yeah, what about energy, for example?
Yes.
Yeah, something you like?
Absolutely. We definitely engaged more with energy stocks since the war started in October. And although there was some volatility at the beginning, now we're seeing, obviously, that really come up very nicely. And we believe that it will continue to be a good sector to be in for the time being. I think when I speak about longer-term investing.
I just wanted to ask you about the consumer. Yeah, I'm sorry. I think we just had a drop for a moment. Go ahead, please.
No, when I talk about longer term investing, and I mean really long term, 10 years or longer, one of the things that we all have a difficult time grasping is that we will probably, the life expectancy has increased significantly and longevity is here to stay. And in much of our financial planning with our clients, we expect people to live to 100 and sometimes more. And one of the biggest fears, of course, is will I run out of money, and will I outlive my money? So I think it's really important to, if you're going to be speculative, to really think long term and allocate, a certain amount in a bucket that will be 10, 15 years or longer, for those times when maybe you still have to have some income.
Yeah, and that's sort of a thing too, trying to put money aside for the rainy day or for later. And if you invest, obviously a compounded dollar is worth more over a long period of time. Just get it in there, right? You mentioned something like the S&P 500. Where would you put those long-term holdings to really sort of set it and forget it?
Well, you never set it and forget it anymore. Those days are over. It always has to be managed, and it always has to be watched. However, some of the more volatile or more aggressive speculative stocks would be including the informational technology sector, and maybe some up and coming companies and I can't mention specific companies, but any new or innovative, anything AI related, obviously will probably boom in the next 10 to 15 years, as long as you're willing to live with the volatility in the meantime.
Nancy Daoud, thank you so much, CEO, Opus Advice First. Thank you, Nancy.
Thank you.